beautiful day, an opportunity to do 55 minutes of current and relevant business conversations. That's our aim here on Business Morning on Channels Television. Good morning, I'm Ini John McQueen. You're welcome to the program. We start as usual with what's going on in the oil space, where prices fell for a second day on Thursday as industry report shows rising crude inventories in the United States, which is the world's biggest crude consumer. It's reinforced concerns that global supply is more than ample to meet current fuel demand. So we look at the prices this morning, slightly different from where we left it yesterday, just 0.3%. That's about 3 cents for Brent, $62.69 a barrel. But you would notice that we've lost about $1 here in 24 hours. WTI is also down 0.09%, $58.44 a barrel. Market sources citing American Petroleum Institute figures said that U.S. crude stockpiles rose by 1.3 million barrels in the week ended November 7. Gasoline and distillate stockpiles, they dropped, according to API, and prices fell more than $2 a barrel on Wednesday after the Organization of Petroleum Exporting Countries published a monthly report saying that global oil supply will slightly exceed demand in 2026, and that marks a further shift from the group's earlier projections of a supply deficit. Insecurity and poor power supply appear to be main obstacles that Nigerian businesses faced in the month of October. And this, according to the latest business expectations survey by the central bank. Highlights of the report mentions that firms across key sectors ranked insecurity highest at 71.8, followed closely by insufficient power supply at 70.9, high or multiple taxes 70.2, high interest rate 68.4, high bank charges also 64.7, and unfavorable economic climate at 63, and unclear economic laws 62.3. And despite these challenges, the overall business confidence index, that's the BCI, went up 38.5 in October 2025, and that's an increase from what we had, which was 31.5 in September, indicating a stronger sense of optimism among firms regarding the general state of the economy. Meanwhile, the report says that business confidence is expected to rise further to 45.6 in November, 52.3 in the next 3 months, and 52.5 in the next 6 months, showing sustained improvement in sentiment as firms anticipate increased demand, higher sales, and a rebound in consumer activity. Norrenberger Securities Limited has acquired a 4.35% stake in NASD PLC for 1.31 billion naira in a transaction that signals renewed institutional interest in Nigeria's over-the-counter, that's the OTC market. The acquisition, valued at 60 naira for a share, involved the purchase of 21.76 million shares from GTI affiliated firms. GTI Securities Limited, GTI Capital Limited, and GTI Asset Management and Trust Limited at a premium of about 111.7% to the NASD's current trading price of 28 naira 35 kobo for a share. According to transaction details, GTI Securities sold 17.19 million shares valued at 1.03 billion naira. GTI Capital offloaded 3.39 million shares worth 203.7 million naira, while GTI Asset Management divested 1.17 million shares for 70.6 million naira. The transaction marks a full divestment by GTI Group of companies, removing a significant institutional shareholder from NASD's register. Despite the divestment, the GTI firms are expected to maintain operational relationships as participating institutions on the platform. The exit comes roughly a year after another major market event, as the 2024 migration of Aradel Holdings from NASD to the Nigerian Exchange Group, and is considered one of the largest institutional exits in NASD's history. And the market yesterday rebounded after that reassurance from the coordinating minister of the economy. And of course, More clarification from Mr. Taiwo Oyedele, the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms. We'll take a bit of what he said yesterday morning on our show.
Capital gains tax is a very, I would say it's a tricky tax to pay, because when people invest and they make gains, they want to keep all of it to themselves. And it's not peculiar to Nigeria. We also looked at, leading markets in Africa. The top market, capital market in Africa is South Africa, over $1 trillion. And that's followed by Morocco, followed by Botswana, before Nigeria, and then Egypt. All these top markets in Africa have capital gains tax rates, 21%, normal CIT rate. These are things that many countries have done many years ago, and we're just doing it now. And what does that do for you is that the fact that you can have the assurance not to pay tax when you have made a net loss is a significant improvement in terms of the reform. And we also have pension funds are totally exempt. Reorganization is exempt. We also have the likes of real estate investment trusts completely exempt. In fact, one of the points we have made is this reform is not for revenue generation. So this is actually a reform that is trying to stimulate growth, bring down the cost of doing business, and reduce the risk, including when it comes to capital investment in the stock market. So I think the important thing is we'll continue with the engagement, we'll provide clarification, and then we just want people to also play their own part by ensuring that they put out the right information.
All right, so the last time, that was on Tuesday, we had the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. We talked a whole lot about capital gains tax, and we have that clarification there from Mr. Oyedele. We'll have Mr. Rwani joining us again today to help us to see if his views have changed. Mr. Rwani, good morning. Welcome to the program. So we're able to get Mr. Oyedele on the program yesterday, and at first he was thinking that it couldn't have been the capital gains tax that was driving the market downward because it has much more benefits than the existing one. But I guess at the end of the day, we all found that investors needed more clarification, and we saw the market rebound yesterday. I wonder what your thoughts are, or your observation between when we had you on Tuesday and today.
Well, thank you. Good morning, and thank you for having me. The reality is that the market rebounded yesterday, but we do not know whether it was a rebound or a dead cat bounce. So one day's activity is not enough to determine the trend of the market. But the clarification that Mr. Oyedele gave is quite good from a perspective of policy making. It's quite good from the perspective of comparative analysis. But when you're comparing countries, you don't look at just one variable. You look at the wages in that country, you look at the level of unemployment, you look at the level of return, and so many things. So the fact that the government is responding is good news that this thing is not going to go away. But to me, the thing to do first and foremost is probably to shift the date of implementation forward so that it give enough time for engagement and clarification. And secondly, look at whether 30% is a fair tax on capital gains at a time when the total level of capital formation in the country, gross fixed investment, stock market capitalization as a percentage of GDP is very low. If you want to encourage investment, the investment culture, then you have to give something up initially. Then subsequently, when the economy has matured, you can then begin to introduce some of these taxes. So, but that governments should collect taxes is not in doubt. That the Nigerian government tax rate should be comparable to other countries in our universe, yes. But however, the implementation and the disruption effects, especially coming at a time when we have all these other factors playing in, means that we could easily, in my own judgment, defer the implementation for a few months to give us enough time to study it, clarify it, and calm investor nerves. That's what I think should happen.
Yeah, but Mr. Rwani, wouldn't that just be, deferring the evil days?
Well, it's better to kick the can down the road a little bit and have enough time to prepare how to absorb the impact than rush into it, and then the disruption combines with other factors, other imponderables happening at the same time to give us what we can call a financial calamity. But the clarification by the Minister of Finance and Coordinating Research Economy, clarification by Mr. Oyedele helps to calm nerves, but it has not addressed the fundamental issue. One, is the rate of 30%, is it a disincentive at this time? Two, can we segregate? Why should we implement it on January 1? We are going into an election year or whatever, what have you. So it's time to take a deep breath and allow some things settle down before you begin to implement it. We have the 4% tariff that I think that has been deferred somewhat. We have the 15% import levy, which I think should not be deferred, and we'll come to that in a minute. And many policies and regulations that are kicking in at the same time. We've got to be careful so that we don't suffer from policy indigestion this time.
All right, so the longest government shutdown in the U.S. has ended yesterday, and it's been signed by President Donald Trump. Can Nigeria expect any impacts from the shutdown to now the opening of the government and government spending? Can we expect any impact seeping down to us here?
No direct impact, because the U.S. economy is different stage of development, one, and we are not totally integrated with the global economy, we might say. But the important thing here is that the fact that the shutdown has ended, the fact that economic activity begins to come back, only confirms to me that the December meeting of the Federal Reserve will not reduce rates. And if the US Fed defers the reduction in interest rates till early next year, it means that we as a country, we as and our central bank will have to be more cautious in our approach in 2 weeks' time as to how to address our strategic move as far as achieving macroeconomic stability. So that is one thing. Two, we've seen that the price of oil has dropped, and we've seen that the stock market in the US and other markets have rallied, which means that the uncertainty factor has reduced in the global markets, and we are beginning to see some form of stability, and that the strength of the institutions within the US begin to come out clearly, which means that arbitrary action by any government, UK, Europe, the United States, you will see less of arbitrary action. And that's what markets like: stability, predictability. Right now, we are seeing the whole impact of artificial intelligence, and that whole revolution of the digital revolution is taking place. It's having an impact across all parts of the world, least of which is its impact on unemployment. And it's quite interesting yesterday that South Africa reported a reduction in its unemployment rate. And South Africa is one of those countries that has suffered a lot from high unemployment, high income inequality, and high level of crime. We are not so far behind, but South Africa is the bellwether economy, the largest economy in Africa. And so what I am saying essentially is that if the US economy goes into a stable state, if the US economy defers the cut in interest rates, that means the dollar stays stronger, all right? And of course, you can see the price of gold coming back from 4,000 all the way to 3,200 and 3,300, which is fair enough. And that signifies to me that the global economy is getting to an era of stability, especially when you know that the US midterm elections are just a year away.
Talking of stability, I wonder if it's a good thing that we see the Naira trading flat, at least at the parallel market at the close of trade yesterday.
Well, the Naira had fallen for about 3-4 consecutive days in the parallel market. But it's not the question of the trend, it's the fact that what's the magnitude of the fall. The total reduction was about almost 7 or 8 Naira. So the investors and traders are taking a view that the Naira is still fairly priced. As a matter of fact, to a large extent, undervalued. So what are they looking at? In the month of December is when we have, November, December, when we have the main crop of cocoa. If you look at the cocoa price there, it's about 5,700, which is about 50% lower than what it was last year. And cocoa is one of the main non-oil exports. the price of oil is down to $62, which is much lower than what it was about a week ago. LNG is flat. So generally speaking, the fundamentals are not threatening, but they're already blinking. There's some amber lights blinking there. So I'm not totally concerned about the value of the naira as long as it's not trading above 1,500. It's still at 1460, 1460 or what have you, and that's still fair value as far as I'm concerned. So I wouldn't worry too much about it. The other thing that we need to think about and talk about is what's happening to the price of petrol.
Mr. Rwanda, I was asking if you see the naira gaining anytime soon, and since it's some good news we've been hearing when it comes to our reserve.
Well, the naira, for me, first of all, will the naira be stable before we start talking about gain? The only thing that will make the naira gain value is if the supply of dollars is far in excess of the demand for dollars. So we have two important decisions to make. One is to determine the level of interest rates. If interest rates in Nigeria fall precipitously, we are going to be seeing that will weaken the naira because our foreign portfolio investment flows will reduce. On the other hand, if we do not do something to protect the domestic refining industry, that is to ensure that the 15% levy stays there and is implemented on the due date, you are going to have people demanding dollars to pay for imports of refined products. That itself puts pressure on the naira. So you can't eat your cake and have it. If we say we want to protect the local industry to make them competitive, if we say we want to in fact allow the naira to trade at fair value, then we have to make some hard decisions. One of those hard decisions is the 15% import levy on refined products so that we reduce the demand for petrol, demand for foreign exchange to buy imported petrol. Right now, there are over 20 ships carrying products waiting to berth in Nigeria. So let us assume that their landed cost is X, and then they berth and they produce, and then the Dangote refinery, which is the price leader, brings down the price. What happens to them? They'll be selling at a point where their marginal cost is higher than their marginal revenue, and that's a recipe for problems. So I'm taking two questions at the same time. One is the value of the naira, which I think is stable, and I do not expect any rapid appreciation in the near term. Two is the price of petrol, and three is the import levy, which is there to protect the downstream and midstream sector in Nigeria.
Talking about the price of petrol, at least Nigerians have an assurance from Dangote refinery they can have a Christmas with a fair price of petrol and no queues. I guess we can take that to the bank.
Though definitely, one is that the quality of the petrol produced at the Dangote refinery is of highest standards. Two, that there will be ample supply throughout from now till January 2026. And three, that the price will not increase. If anything, I think, touch wood, that there may be another price reduction. And we expect that to happen any moment from now.
All right, and how do we expect all of this to seep into commodities prices?
Well, the truth is that if you look at the commodity prices, as you can see up there, you would find that, technically speaking, we have rice still constant at 70,000. Remember, we talked about last time, at this time last year, rice was 110, thanks to the Indians lifting the ban on the export of rice. And this will flow through till first week or second week in December. We do not expect the price of rice to increase for more than 75,000 throughout, even during the Christmas season. Beans is flat at 65,000, and tomatoes is down sharply to 65,000, while a bag of pepper is staying flat at 30,000 naira. Gari is at 20,000 naira. So, generally speaking, the price of food commodities have come down and staying down. The point is that do people have the income to buy the food? So, quantity matters, or quality matters more. Because if you eat junk, you end up being a junket if you're not careful.
You end up spending more money for medicals, money that you didn't spend.
Tell me about that.
Yeah,
I'm telling you,
Mr.
quality of food matters.
Yeah, go ahead.
Quality of life matters.
Go ahead, please.
I said quality of food matters, quality of life matters more. Right?
Sure. So, I mean, just before we let you go, I read somewhere that the federal government has formed a committee for Dirty December. How much do you know about this? What can we expect? Because Christmas is coming. We've been talking about the creative economy and the potential that it holds, especially at festive period. So it's interesting that the federal government is also looking that way. But I wonder what the committee will be doing about Dirty December.
Well, that's the thing about Nigeria. Always a dollar short and an hour late. If you are talking about setting up a committee for December 2026, I can understand. December 2025, those who are coming have already bought their tickets. Those who are, they are already concerts and everything. So what is the committee supposed to do? Apart from the committee is made up of people who do not know what they want to do and probably do not intend to do anything. So that's the normal joke. But good to have a committee, but quite frankly, committees do not achieve much, especially when they are being set up a couple of hours before or few days to Christmas. Everybody in Nigeria knows what they're going to be doing on Christmas today. So we don't need a committee to tell us that. So I think the committee should focus more on what's going to happen in December 2026 so that it can have an impact. Right now, it's just going through the motions.
Well, maybe they want to study 2025 and then they'll use that to have a roadmap for 2026.
That's the job of a think tank, not a committee.
Okay, all right, Mr. Bismarck Rwani, Chief Executive Officer of Financial Derivatives Company. Thank you so much for your time on the program.
Thank you for having me.
All right, let's take a break now. When we come back, you really need to join us because what are some of the banking fraud risks that you are exposed to? You may fall for. You really want to know that. We'll discuss that after the break. Please stay with us. Welcome back. It's still Business Morning right here on Channels Television, and we're discussing some common threats that fraudsters have created and are using, especially concerning your money. You need to protect your money. And we're doing it because Deloitte, they've done some research and they found some of those very common ones that are easy to fall for. And those are some of those very common ones: the use of deep fake impersonations, AI-led investment scams, and phishing campaigns. They exploit authorized push payment systems, which you could trust. The use of quick response codes, those QR codes, and the old and traditional insider use by those scam and fraudsters is also one. Well, we have Deloitte Nigeria represented here in the studio this morning, the Associate Director of Risk, Regulatory and Forensic from Deloitte Nigeria. That's Chiazokam Okadigbo right here. Hi, Chiazokam. Good morning and welcome to the program.
Good morning. I'm doing well.
When it comes to our money, we have to be very protective.
Absolutely.
It didn't come easy.
Absolutely.
So you have to. and you guys, that's Deloitte Nigeria, you've taken time to do some of this research. Tell us more. I mentioned some of them about those common threats.
Okay. So, I mean, you covered quite a bit of them. There is phishing, really, okay? And what phishing relates to is really people trying to be friendly to get relevant information from you. A number of us would have experienced things like, oh, this is your bank. You need to send this number to whatever email address. Meanwhile, it's not your bank that is reaching out to you. So a lot of times, that is what happens when fraudsters are trying to get relevant information. And if we're not vigilant, before you realize it, they clear the account and move on to the next.
But there are ways, for instance, if you get a mail and maybe on top you see the sender, the name of a bank, there are ways you could look underneath and know that it's not really your bank.
Yes, absolutely. So there are ways you can, the one common thing that you see in those kind of emails, usually the spellings are wrong. You
Is
might
that deliberate?
Well,
because why would you spell right when you know you want to defraud someone?
It's pretty common, but most times it's very close. So maybe you have one letter different from the actual spelling. Also, the link that you would see when you click on the link to see what address is there is usually different from the address of the entity that is supposedly contacting you, which is why the QR code you mentioned earlier is very dangerous, because people don't see what link they are clicking on. So by the time they scan, more often than not, it's probably too late. There's a malware in their device or whatever.
Mm. So there are other ones. Fraudsters creating evolving payment frauds to deceive customers into...
Absolutely. So this is what happened. In fact, there was an instance that happened somewhere outside Nigeria where a staff was tricked into approving over $20 million.
Wow.
And how did this happen? The person was set up, put on a Teams call. On that Teams call, there were supposed individuals on that call, but they were actually synthetic, people created. And the person had a call.
What do you mean by synthetic? In case I'm making it up in my mind.
So these are not real people,
like where AI created.
Exactly.
Oh my God.
Where we put out a lot on social media these days. So a lot of us, our voices, our images are on social media. We don't know how far it goes. So the bad actors can take this and simulate it into you saying a particular thing. Meanwhile, that's not what you were actually saying in that conversation. Yeah.
That is so scary.
Yes.
Yeah, well, because even here on channels, you go to some social media, I've seen myself a couple of times advertising drugs and things like that.
Yes.
And we've had to put it out there to say this is not, I believe that's what they call deep fake.
Yes. So they take on actual videos of real people, but then the messaging or what the person is saying, they manipulate it to suit their purpose. But because that information is already out there, they can take it and adapt it.
And someone got away with $20 million?
Oh, yes. In fact, the staff paid to different vendors. And the one mistake, in that particular story was she did those payments without actually calling the CEO to confirm. It was only after she had made the payments that she then called, "Oh, please, sir, I know you called me, you said this was urgent, I've done it." And the boss was like, "No, I never said so."
That's scary.
Yes.
Just like, sometimes you get a message on your phone from a friend. I'm stranded somewhere.
Absolutely.
I need to make this quick transfer. You wouldn't know that your friend's account has been hacked or something.
Yes. So I think for us as well, it just means that we need to be a bit more vigilant. So where you do get those kind of messages, if you're in doubt, just check.
Just call the person on the normal phone.
I got this. Is this really you? And, things like that have helped people to avoid, very dangerous situations.
All right, so let's see. That's the use of deep fake impersonations. I believe that's the $20 million AI-led investment scams and phishing campaigns.
Yes. So this relates to where fraudsters try to get information from people. Maybe they want to get their PIN, their account number, social security, depending, or BVN in this case, and they want to use it to then perpetrate fraud, right? And typically people hand over that information feeling they are talking to a trusted person without realizing that they are actually not speaking to a trusted person.
Sometimes this comes in call, or is it via text or messages?
Various ways it happens. Text messages, phone calls, emails. Sometimes you see an email, "Congratulations, you've just won something." Meanwhile, you never participated.
You didn't apply for it.
In anything. And
I hope one doesn't get greedy and they tell you, "Congratulations, you're a winner of something." I know there was once a text, especially during the campaign election period, that this local government area is giving this, and you're wondering, so how did you even get my number in the first place? So what's your greed? I think that's another message. So they exploit authorized push payment systems.
Yes. So this is a very touchy one, right? Because what happens here is that the individual themselves are the ones that authorize the payment, but they authorize it based on a false belief. So take, for instance, someone, plans or prepares something and tells me, oh, Chiazo, you need to make this payment for this reason, and then I actually go ahead and approve. But it turns out that
the person who sent that is a fraud.
Yes, is a fraudster. So because why it's called authorized push payment is the real owner of the account is the
actually
one authorizing
the payment.
But they are authorizing that payment on a false. Sometimes this happens in romance scams. It happens in investment scams. So they tell you, oh, we're going to give you 50% return, right? And then you keep sending money, believing that you're going to get this, but when you're asking for the return, all of a sudden that company doesn't exist anymore. The people that used to call you every week.
What's the latest one we had? We had the MMM.
Yes.
That one was really popular there.
Yes. And there's been CBEX or...
Yes. That's the latest.
A lot of them, yeah.
All right, and then the use of quick response code, I believe
the QR code, yeah.
And then the insider, that's good old or bad old
the enemy within,
yes.
Right? So yes, this is where you have employees or stakeholders within the entity who are actually acting in cohorts with people outside or not to perpetrate fraud within an organization.
So a lot of people ask here in Nigeria, we are coordinating our data, BVN, NIN, everything should be connected. You can have a phone number that cannot be identified with an individual's. And so people ask, why does it seem so difficult that even when these things happen, it is and it happens within the banking sector.
Absolutely.
You know, it's your money is transferred from one bank to the other, or possibly even the same bank, different account. Why is it so difficult to trace and actually get the culprits?
So there are a number of reasons why this is happening. There's the reason around technology. There's also the reason of reluctance to collaborate. Because the truth is, the bad actors work together. They share intel. So if we're on the good side, why can't we then work together as well? Because things like this thrive in secrecy, in silos. It will interest you to know that there was an instance we came across where a fraudster was able to successfully perpetrate fraud across companies within the same financial services group. And the one major reason we could see that allowed for that to happen is because even entities within a group were not speaking to each other. So this same customer will open with maybe the insurance arm and then go on to the banking arm, the investment arm, and before they could realize what was happening, the fraudster had cleaned out. So collaboration is very, very important if we're going to be able to...
So I wanted to say, is it because of competition among players? But if you say that a fraudster got away with the same arm, there shouldn't be competition within the same company of different arms. Is it just the lack of intentionality, you know, to actually... Maybe we're not so used to doing data, because I mean, in a country like the United States, they just put in your name and your whole life history comes out there.
Absolutely. So I think it's a number of things. There's a bit around people are reluctant to show that, oh, I have this issue, and almost like a local proverb that we say that when all lizards are lying prostrate, you don't know which one has belly ache, right? And nobody wants to feel like, oh, my own is the worst. But the problem is, when we do that, then the fraudsters are, cleaning out. Because when we refuse to work together, then we really don't have so much of a chance at dealing with them. The other thing as well I see is, especially when you're dealing with an entity within the same entity, is also how do we see the issue of fraud? It's not in one action, right? It's usually about how have we structured our processes, our frameworks, to make sure that it's even difficult for people to perpetrate fraud within our system. And we need to think beyond, convenience. We need to think beyond availability. But even in designing products, do we think about whether this opens us up to risk? Yes, especially in the financial services sector, people want to do things really quickly. They want ease of, you want your transactions to go without delay. But in designing some of those products, do we really sit down to say, what are the risks here and how can I mitigate it while still ensuring that my users have a good experience while using my product.
You mentioning convenience makes me think of the banks, because sometimes it feels like the banks are just not ready to go out there outside their normal activity to ensure that a fraudster is caught, a customer's money is returned. If a complaint is made, they can just say, oh, go and check this bank, go to maybe the receiver's bank. Meanwhile, the originating bank can also give all the details.
Absolutely.
They can share it with the police, and the police can follow up. But maybe, as you said, we do not have a system that ensures that the fraudsters, are caught. And I mean, when you start exposing and they start failing and the news goes out, I believe less people will find it productive to do that. So getting the banks to be interested enough to create maybe a department, a unit, and personnel there, and creating a relationship with the police. That's also another, the police.
Absolutely.
I think if we had something like that, because it's going from one bank to another bank, and the banks are connected by CBN, by NIBS, and all of that. Everybody has the data.
And everybody has a part to play in this whole mix. The banks in the area of sharing that intelligence, the threat data, what are we seeing? And it doesn't mean that they need to breach privacy rules when sharing that data. They can anonymize the data. It can be aggregated data that is not linked to individuals, right? But then shows the patterns, what we're seeing, to help people then take relevant precaution. But there's also the regulators, because we need to have the appropriate regulatory framework in place. Sometimes the regulation may be more restrictive than allowing people to do what is needed. And in the world that we live in is evolving, so we can't afford to have static regulations as well. So which is why it's a bit heartwarming to see that in some of our sectors, we're seeing more progressive regulations coming out. It's not quite where we want it to be, but I think it's a step in the right direction, because we are a country that moved from banning everything crypto to now saying, okay, we want to know who you are, we want to regulate you, we want to understand, because the success of regulation starts from understanding what you're regulating, right? And this is where even the players have a role to play. It's in your interest to help your regulator understand what you're dealing with, because the more they understand it, the more they can regulate it. Then, of course, there's law enforcement, whether it's the investigation of those issues. And I believe the police,
they now give attention to cyber security and all of that, but they cannot do much without data.
They can't. And even the telcos are important, because a lot of fraud is happening on our devices.
True.
So even telling, where is this SIM, how can we geolocate it? And a number of times they've been successful busts with that kind of cross-sectoral collaboration.
And I know the CBN, they've changed some of the guidelines for POS. Because that's also another one. Of course, that also connects to the telcos and the POS. It's one large community that requires a lot of collaboration.
Yes, absolutely. I agree. And this is why, in thinking about it, coming next week, we're thinking of just having a discussion, right, amongst various sectors. How do we work more together than work against each other?
Because I wanted to ask you, so Deloitte, you have found this and all of that. Then what do we do with this information apart from just talking about it?
Yes, so we need to keep having those conversations. And I think that next week, that event we're having on Tuesday, on the 18th, is one step in that direction. We're bringing together regulators in the room. We're bringing industry players as well to say, let's look at this issue. How can we work more together? There's the technology side of things. There's building resilient fraud risk management frameworks. But then there's also collaboration. Regulators, what do you need from industry players? Industry players, what do you need from your regulators? We need to be able to work together to make sure that we can beat these people at their game.
Okay. I hope we can go beyond the lines and collaborate. To save our money, our hard-earned money.
Absolutely.
Thank you so much, Zokam Okadigbo, Associate Director, Risk Regulatory and at and Associate Director, Risk Regulatory and Forensic at Deloitte, Nigeria.
Thank you very much for having me.
Thank you. Yeah. All right, now, the federal government, through the Ministry of Finance, incorporated as MOFI, they've taken a major step to deepen Nigeria's capital markets with the listing of the 1 trillion naira MOFI Real Estate Investment Fund. And they did it on the main board of the Nigerian Exchange Limited. And the move marks one of the largest real estate fund listings in the country's history, which is aimed at mobilizing private capital for infrastructure and property development across the country. Top government officials, capital market leaders, they were all there, in fact. That's where the coordinating minister of the economy gave some calm to the nerves of investors at the NGX. Here's the report.
That's the sound of a closing gong on the Nigerian exchange to commemorate the listing of the Ministry of Finance Incorporated Real Estate Investment Fund Series 2.
Saving and investment culture that we need.
While speaking at the listing ceremony on the floor of the exchange in Lagos, the minister said the 1 trillion naira Series 2 investment fund with 1 billion units priced at 100 naira each represents a crucial milestone in Nigeria's efforts to mobilize private and institutional capital for affordable housing and sustainable development.
What we have listed today, we have made it possible at 100 naira per unit. We have made it possible for ordinary Nigerians to be able to be part of the saving and investment culture that we need for us to rely mainly on our own resources in order to grow and develop the economy. In this particular case, it's in the housing sector.
On his part, the Executive Director, National Coordinator of EMRIF, Sani Yakubu, shed more light on the fund's listing on the NGX, while the Managing Director of ARM Investment Managers, Kai Oga, commended the initiative as a catalyst for economic growth and market confidence.
This fund provides 3 critical leverages that the typical Nigerian requires. The first is long-term, low-cost mortgages. What is long-term? We're doing up to 20 years in terms of the tenor of the mortgages that our program provides.
Generally, a lot of Nigerians struggle as they start to work, just to build or create wealth, but housing gaps are there, and given that the MRIF program has been created, with a lot of considerations, the rates, while maybe not at its lowest, but it's very, very fair and reasonable, and people can take advantage of it.
With the listing of the MOFI Real Estate Investment Fund, the federal government is setting a new standard for asset optimization, one that merges public ownership with private sector efficiency.
Let's take a break now. When we come back, global news will be next. Stay with us. Welcome back. Time to go global now. President Donald Trump has signed legislation ending the longest government shutdown in the United States history, hours after the House of Representatives voted to restart disrupted food assistance, pay hundreds of thousands of federal workers, and revive a hobbled air traffic control system. The Republican-controlled chamber passed the package by a vote of 222 to 209. With Trump's support largely keeping his party together in the face of vehement opposition from House Democrats, who are angry that a long standoff launched by their Senate colleagues failed to secure a deal to extend federal health insurance subsidies. Trump's signature on the bill, which cleared the Senate earlier in the week, will bring federal workers idled by the 43-day shutdown back to their jobs, starting as early as Thursday, that's today, although just how quickly full government services and operations will resume is really unclear at this time. The deal extends funding through January 30, leaving the federal government on a path to keep adding about $1.8 trillion a year to its $38 trillion in debt. Swiss economy minister is set to meet the United States Trade Representative Jamison Greer for trade talks. That's today. The Swiss government said that the negotiations to lower President Donald Trump's crippling tariffs enter a crucial phase. Switzerland is trying to negotiate a reduction in import tariffs of 39% on its goods that President Trump imposed in August. And also, the Prime Minister there flew to Washington with Helen Bodler, head of the State Secretariat for Economic Affairs, who appeared quite optimistic when set off in a government aircraft. And then the Swiss government did not provide further details on the ongoing talks, but they had described it as very constructive, a conversation that the pair had with Greer on a video telephone. And a deal to lower the tariff to 15% could be arranged in the next week or two, according to their spokesperson, although it still needed a final sign-off from President Trump. The Office for National Statistics in the United Kingdom, in its preliminary reports, has published that the United Kingdom's gross domestic product, that's the GDP, declined by 0.1% in September. This is coming in lower than analysts had predicted. Quarterly GDP growth slowed to 0.1, down from 0.3 in the previous quarter, reflecting mounting economic pressures annually. The economy expanded by 1.3% on the annual basis. The production sector led the slowdown, falling 0.5%, while the services sector rose 0.2%, and construction grew by 0.1%. And they said there are no changes to the headline real GDP quarter-on-quarter growth across 2024 and 2025 as a result of this update. In Japan, the yen dipped to record low versus the euro and wallowed near a 9-month through against the dollar on Thursday after Japan's new prime minister said that she wanted the central bank to go slow on interest rate hikes. Japanese Prime Minister had on Wednesday expressed her administration's preference for interest rates to stay low and asked for close coordination with the Bank of Japan. She also has asked the BOJ governor to report regularly to Government Council on economic and fiscal policy. Following this, of course, the Australian dollar has climbed to a 2-week high after official data showed a steeper drop in the unemployment rate from a recent 4-year high than economists had forecast, and that reduces the possibility of further rate cuts in that country. The yen dipped to an unprecedented 179.50 compared to the euro earlier today, before bouncing back to 179.25. The Japanese currency slipped to as low as 155.01 per dollar, putting it just a whisker away from Wednesday's trough of 155.05, a level not seen since early February, and then it slightly went lower than that. And then in India, the country has revised its royalty rates for a number of critical minerals, including graphite and zirconium. And the change comes as part of the government's efforts to promote domestic mining and reduce dependence on imports. Under the new system, royalties on high-carbon graphite will be charged at 2% of sale prices determined by the Indian Bureau of Mines instead of a fixed per ton value. Meanwhile, as the global demand for clean energy materials grows, India is stepping up its effort to secure critical mineral supply chains. The country is a small producer of most critical minerals, including graphite, of which it currently imports about 60% of its needs. To reduce this dependence on imports from China, who dominates the global processing market, the Prime Minister there is looking to attract private and foreign investment into the mining projects. That's it on Business Morning today. Thank you so much for being a part of it. At 1:30, I'll be back, and I hope by then the possibility of a debt cat bounce, which Mr. Bismarck Rowani had introduced, will not show its face. We hope to see a green market coming from Nigeria, hopefully. John Mekwa, I'll talk to you at 1:30.